Real estate is the sector in focus now, and it's really been the flavor of the month in the market as well. After brokerages like CLSA and Morgan Stanley turned bullish on the sector, the Embassy REIT IPO was also successfully subscribed, indicating perhaps that there's good appetite for more investment avenues here. MR Jaishankar, CMD of Brigade Enterprises, is now joining us to talk about some of these developments going forward. Mr. Jaishankar, good morning, and thank you for joining us on Bazaar Corporate Radar. First things first, I mean, before I talk about REITs and the excitement there, the other very positive benefit that came in for real estate players was the flexibility that the government is now offering with respect to the GST changes and which regime you're going to follow, whether it's going to be with input tax credit or without. What have you decided for your company? How do the numbers add up? And what is the P&L impact that we should expect here?
Yeah. Good morning. Thankfully, as regards the GST, thankfully the government, the Council of Ministers have given an option to follow the existing system of 12% GST and residential with input tax credit. And as far as the new projects are concerned, it is mandatory to go for 5% and 1% GST without input tax credit. And for the ongoing projects, it is definitely a plus. And most developers, in my opinion, are likely to make use of the concept of taking in input tax credit and then not adding the cost. But going forward, with the best of intentions, whatever may be the good intention of the government and the GST Council, I think it will have a cost push effect as far as new projects are concerned, to the extent of 5% on houses which are not in the affordable category, and 1% additional cost in houses which are in the affordable category. Because primarily developers don't take GST paid on inputs as a cost, and as that will be recovered by the ultimate final customer. So this, I don't know, somewhere something has gone amiss, and for the new projects with the good intention of in spite of the good intention of government, it will see a cost push effect. Only if and only if the prices of the selling per product is above 7,500 to 8,000, there could be some benefit. But other than Mumbai and Delhi, the rest of the country, the average selling prices are hovering somewhere between 5,000 to 6,000 rupees a square foot, or even less.
Okay. Well, Mr. Jaishankar, just hold on.
This is my take on the recent changes in the...
Sure. Just hold on. We need to get our focus back to the markets, because once again, there's a bit of a sell-off that's creeping in. Remember, 11,350 was the level that was holding up until now. Looks like that could break anytime soon. The Nifty is down once again over 100 odd points. Some banks are actually exerting a lot of pressure. So whether it's Kotak Bank, Yes Bank, SBI, ICICI Bank, that whole lot is down about 1 to 2 odd %. Reliance as well, fresh selling seen in Reliance. It was the big loser on Friday too, and right now it's also exerting its might, down about 1.5%. So not looking good for the bulls.
Yeah,
so
and
far.
I think Kotak Mahindra Bank, HDFC Bank, Sonia, look, I mean, it's easy to say now because you're seeing it on the screen, but the ETF-driven rallies are vulnerable to these kind of mini sell-offs. As of now, you would still want to call it a mini sell-off, not more than that, because of the rally that we have had.
Yeah.
But let's see, 11,150, 100 is the 20-day moving average. I don't know if this is that kind of correction that you want to go there. This is expiry week as well, by the way. A lot of bulls are sitting on a lot of profit.
Yeah.
So let's see. If we break the morning low, then perhaps things could get
It's actually barely been 2 days, right? 2 days, not even 2 days of a big sell-off. So we'll wait before taking that call. But Mr. Jaishankar, I just wanted to come to you on the Embassy REIT IPO that was recently launched and did very well. What are the leasing market trends looking like, and what are the vacancy levels that we have in large markets? Also, would you be looking at launching a REIT anytime soon?
We are glad Embassy Office Parks REIT has done well. It is going to be the bellwether for the real estate REITs going forward, and it was much needed to the benefit of the real estate sector to raise funds for the office portfolio. And I am sure quite a few other developers, large holders of office portfolio, will be planning. As far as Brigade is concerned, for us it may take another 2 years or so. For the next 2 years, we are unlikely to come with a REIT. But it is a very good move for the market as such.
Okay, so let's talk about your bread and butter business, which is residential housing. How are trends now that we are closing out the year? Fourth quarter, sir, how has it been? Because, I mean, if I compare it year on year, you've had a blowout year. But if we just compare trends from Q3 to Q4, then how are volumes moving? How have prices held up?
I think real estate sector, residential sector in general is doing fairly well. And, compared to I would say if for the first 9 months, if we have done about 2 million square feet, we are hoping to do about 1 million square feet in this quarter. We still have a week to go, and we are trying to reach the target overall. And the good part is all sectors in real estate are doing well, whether it is the office, retail, or residential, and for that matter, even hospitality business has also shown higher occupancies with improved ARRs. So I think the 2019 should be good, particularly post the elections in Q1. There could be much better trends. A stable government will substantially improve the future for the sector in particular.
I just want to reiterate that number. Just to reiterate that number, sir. 9 months you did 2 million square feet. You're saying in the last quarter you could add a whole million more, taking the total tally for the year up to 3 million square feet.
Yeah, we are trying to do that. Yeah.
Okay.
The 3 million square feet is what we are reaching this quarter.
So what will this 3 million square feet do to you in terms of, your quarterly revenues? I mean, in Q3, you've done revenues of almost around 700 crores or so. By the end of the year, what are we looking at?
So, as I said, the revenue recognition is a different aspect altogether. Reason being, now it is based only based on the registrations and handing over that is done to the customer. Earlier, it was on percentage completion method. Now it is, total, completion and registration of the product. That way, I think, new bookings is different from revenue recognition. But overall, FY19, we will present a much better picture than earlier.
Okay, what about lease rentals? By FY20, what kind of growth do you see in lease rentals? Because there's some, analysts who are forecasting doubling of the rental income as well over the next 2 to 3 years. Is that a logical estimate?
Yes. See, currently we are at about 300 crores lease rental revenue. I think in about 2 years, we should be reaching 2 to 2.5 years. We should be reaching about 650 to 700 crores lease rental revenue. We hope to do that. We have at least 7 million square feet of new projects under construction. And if you take so some strata sale also we have. If you take strata sale also, we have nearly 9 to 10 million square feet of office space under different stages of construction. All this, when leased, it should give us substantial additional office rental in the coming quarters and year. In fact, I'm happy to say we are keeping our fingers crossed that in this quarter, we might reach new leases to the extent of about 1 million square feet.
Okay, new leases of 1 million square feet. That's interesting. Final question from my side, sir. Now, everybody is getting into these co-work spaces, right? Even you launched a project. It's called Buzzworks, I believe. It's a recent launch. How does profitability for these co-working spaces compare with the other commercial operations that you sort of undertake? I just want to understand this from a business profitability standpoint.
Actually, for us, it is too premature to talk about profitability. We are making our present felt. I think after completing about 4 quarters, we will be in a better position to share whether it is co-working or Buzzworks is more profitable or less profitable. But it is an emerging segment in the office sector. So naturally, Brigade would not like to be left behind. I think there are a few developers who have already gone ahead in this, and I think probably going forward, quite a bit of new office leases may come as co-working spaces. So that way, Buzzworks is here to meet that segment of demand who look for shared offices and co-worked office spaces. That is the idea, but profitability maybe I'll be in a position to say by FY20.
Sure. Okay, well, we leave it at that. Thank you so much for joining us and giving us an update on the business. By the way, the stock is up almost 30% in the last 6 months. Rightfully so. The management is quite optimistic of doubling their lease rentals by over the next 2 to 3 years, and they're looking at doing 3 million square feet by the end of this year. That's a pretty lofty target. But for the markets, once again at the low point of trade, the Nifty is now down over 100 points. So what do you do at a time like this? We'll take a quick break and be back. Fresh technical trades lined up with Ashwini Gujral, Mitesh Thakkar and Prakash Gaba. Also, Naveen Agarwal, the MD of Motilal Oswal Financial Services, will join in for some market talk.